Hello traders, FX Pip Collector here. Today is Tuesday, April 23rd, and I'm going to be analyzing the US dollar yen starting on the monthly, working my way down to the 1 hour time frame for the full top-down analysis. So in the dollar yen, I'm definitely still looking at this as a five-way pattern up. My original target was right around the 155 area, which we are definitely getting very close to that. But until I actually see evidence that this wave 5 is over, I would definitely still be basically looking for longs on shorter time frames. Heading down to the weekly, we are approaching the 100% Fibonacci extension. To me, it kind of looks like a 1, 2, 3, and if it is a wave 3, it actually could break out of there, and it could easily go up to the next extension level, which is actually above the 158 area. So until this market actually proves that this trend is over, which it definitely has not done so yet, and especially if the US dollar index keeps on trending up, which it looks like it could, this could easily keep on trending up also. So heading down to the daily time frame, like I said, we are sitting at a Fibonacci extension level. Most of the time, even if these do not, turn at these levels, then they usually do respect them at least temporarily. So we may actually get a pullback at this level, but it could easily just keep on going up. So unless you get a very significant break of structure, which for me the last structure level is right here, if you get a big break of structure, then yeah, that would definitely turn me into a seller. But until that actually happens, I would definitely still be a little bit cautious about going short, and I would definitely still be looking for longs on shorter time frames. Heading down to the 4 hour time frame, even on the 4 hour time frame, we are definitely in an uptrend. Our most recent 4 hour structure is right there. If it breaks that structure, that could also turn you into a seller. For me, I'm using the daily as my roadmap, so I would be looking for this structure break, because this structure break right here only really tells us that this wave is over. It could easily just be a little ABC crescent, which would be a crescent to this last wave up, and just keep on trending up. So it definitely depends on what kind of trader you are and what is a desirable trade for you and not a desirable trade. Taking it right down to the 1 hour time frame, until I get at least some sort of break of starts on the 4 hour daily, I would 100% be doing nothing but looking for longs. Now, if it goes up, bounces from this 100% fib, then goes down and breaks structure, that would definitely turn me into a seller, but you would definitely still have to be careful because, like I was explaining on the 4 hour, it could just make an ABC crescent to the last series of higher highs, higher lows, and then just keep on trending up later on. So until the higher time frames tell me otherwise, this doesn't even necessarily have to break structure. It could always just go up, make a little bounce, and then just keep on going up. So until price actually tells you that something is over, I personally think that your trades are going to be way more likely to be profitable if you keep on trading with the trend and you just continue to look for longs at the end of every single pullback you see for the continuation of this big 4 year uptrend on the weekly and monthly time frames. So don't forget to join my free Discord group, link down here in the corner, and don't forget to check out my membership program that gives you access to the daily live trading sessions and access to my swing trade setups by signing up at my website, fxpipcollector.com. As always, thank you and happy trading.